let's start out with you. We've seen shares of Nvidia surge more than 170% year to date. What do you think 2025 has in store for Nvidia when it comes to the shares?
I think there may be a little bit more volatility ahead with pending rules that will limit their ability to sell into markets that apparently are passing those chips on to China. So that's the big unknown at this point. How much of their sales are actually going through this sort of backdoor channel to China? But I'm not expecting major dips, just it's always hard to maintain the kind of trajectory they've maintained for the last couple of years.
And then, Will, what's your view? Do you think Nvidia will still be the leader, the dominant player? I mean, there was talk this year that AMD might catch up. It has not been the case. But what's your view on Nvidia and the path forward from here?
Yeah, my view would be very much that Nvidia continues to be the market leader in AI, that its position really is so far out in front that it's difficult to foresee any credible competitor in the short to medium term. And that is why that David made reference to it just then. There has been some interference from the US government, the French government, and now the Chinese government inquiring about sort of monopolistic type practices because their position is so advanced. I think that the future for Nvidia next year is actually very bright. I think that we'll find a way past these sort of investigations, especially with, Musk's involvement with the Trump administration. And I think we see a $4 trillion plus market cap for Nvidia next year.
In recent years, one of the most popular stocks on the market has been Nvidia. Due to the high demand for the company's graphics processing units, GPUs, which are the chips that drive nearly all of the most sophisticated artificial intelligence systems, shares have increased by 840% since December 2022. Although Nvidia is presently valued at $3.3 trillion, several Wall Street experts believe that its robotics computing solutions and Blackwell GPUs will increase its value. This is wonderful news for stockholders of Nvidia. Last week, Barclays' Tom O'Malley increased his target price for Nvidia from $160 per share to $175 per share. From its current share price of $137, the forecast suggests an upside of around 28%. He explained the upward change by pointing to anticipation that Nvidia's next-generation Blackwell GPUs will significantly boost sales growth. Recall that the industry standard for speeding up data center tasks like artificial intelligence, AI, is NVIDIA GPUs. Blackwell GPUs can do AI inference jobs up to 30 times quicker and AI training tasks up to 4 times faster than the prior Hopper architecture. According to O'Malley, Blackwell GPUs will increase sales by $15 billion this quarter and might more than double that amount the next quarter. There are other Wall Street companies that have raised their outlooks besides Barclays. The average estimate of Nvidia's earnings for the fourth quarter of fiscal 2025 has climbed by 5% over the past 90 days, according to LSEG data, and the average estimate for fiscal 2026 has increased by 9% over the same time frame. Increased trust in Blackwell is cited by many analysts as the reason for their upward revisions. The IO Fund's principal technology analyst, Beth Kindig, is very upbeat. According to her, Blackwell GPU sales of at least $200 billion will propel a minimum 50% increase in data center sales in fiscal 2026. By 2030, Kindig predicts that Nvidia will have grown from its present market value of $3.3 trillion to $10 trillion, a 200% increase. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
And then, David, I got to ask, when you think about the AI story, and NVIDIA has really been the king here, and the past 2 years, that's been a theme. What's next for AI in 2025, and where are we in the AI story?
Well, from my perspective, I think there will be an increasing pressure put on this idea that positive ROI for end user consumers, specifically enterprise consumers of AI, the pressure is going to be, prove it to me, prove that all of this massive investment that we've made is actually driving efficiencies that are measurable within my business that warrant continued investment. I agree with Will. Through 2025, I think NVIDIA is fine, and they are being rewarded for how great a job they're doing with global scrutiny, which is always frustrating. But yeah, that's really the next big question. It's going to be, show me the ROI.
Mm-hmm. And then, Will, what's your view, especially when you think about the AI arms race?
Yeah, I mean, what we're seeing is that huge multiplier effect. So for every dollar of CapEx that's been spent in AI, you have the multiplier effect throughout the industry. So NVIDIA has captured a huge amount of attention. But we saw recently that the benefits or the gains that companies are seeing from AI extending into the software sector, now with companies like Salesforce reporting a great quarter last. So we're really starting to see that cascade, that trickle down of AI and the benefits to other sectors. Look at the performance of companies like Tesla. Since obviously the election result was announced, and part of that is driven by autonomous and the future for AI, again, within the transportation sector, which incidentally, NVIDIA is also increasing its investment in that, particularly in China, contrary to some of the narratives that you see. So again, this is about probably still, in my mind, 100% the most important investment theme that we have right now, which is AI, and that will continue and accelerate into next year.
And then,
furthermore, according to Dan Ives of Wedbush, demand for Blackwell GPUs is currently 15 times greater than availability. In other words, he thinks NVIDIA can only provide one chip for every 15 that buyers desire to purchase. This puts into perspective previous remarks made by NVIDIA CFO Colette Kress, who stated that Blackwell demand significantly outpaces supply during the third quarter earnings call. The Wall Street consensus undervalues NVIDIA's profits growth by 30% over the next 5 years, Dan Ives recently told CNBC. He believes that Blackwell GPU income will surpass forecasts in the near future, which accounts for a portion of that shortfall. However, Ives also sees long-term benefits to the consensus brought about by robotic solutions. That final point is especially crucial. While generative AI is now the market's main focus, Jensen Huang, CEO of NVIDIA, claims that robotics driven by physical AI will be the next big thing in AI. For example, while physical AI is able to comprehend, navigate, and engage with the real world, generative AI is able to produce text, images, and other media material in response to instructions. Given how well NVIDIA has monetized generative AI, there is reason to think the business will do the same with physical AI. The unique benefit of NVIDIA is that it offers a full-stack computing solution for robots that operate on their own. Its robotics platform includes the software development tools required to create industrial manipulation arms, driverless cars, and humanoid robots, as well as the supercomputing chips and networking equipment required to train AI models. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
And then, Will, I want to ask you one really quick follow-up there, especially when it comes to NVIDIA. It's been kind of this choppy trade recently, especially if you go back to October. It's just been kind of stuck in this range. It's still there today. It's a little above $130 a share, but it's under pressure today. Does it seem like the valuation is stretched? There's been some argument about that. Meanwhile, there are obviously the bulls, which there are a lot of bulls around it, who say there's still more growth to come.
I think it's really depends on how you view valuations, because even when Nvidia was trading towards or indeed around its all-time highs, when you look at the valuation, some people could say that it was high, but when you think about a company that's priced for 100% growth, you could also look at the valuation and say that it was really cheap. So it's going to be really down to how you view valuations of these kind of hyper growth stocks. One thing obviously we do know is that the growth is expected to be very strong, continue to be very strong for next year. Margins as well, very strong. So I think that bodes really well for the stock.
With agreements totaling $57 billion in 2024, data center M&A activity broke the previous record of $52 billion in 2022, according to Synergy Research Group. Despite a precipitous drop to $26 billion in 2023, the recovery in 2024 saw two significant equity investments in Vantage data centers totaling $9.2 billion. Additionally, the increase was aided by stock investments in data center solutions companies EdgeConX and DataBank. Since 2021, private equity has accounted for 80 to 90% of deal values, demonstrating its dominance. The trend is anticipated to continue in 2025, driven by rising demand for digital platforms, generative AI, and cloud services, with $29 billion in pending deals and a $15 billion pipeline. Additionally, the company estimates that global spending on data center software and hardware would likely increase by 34% in 2024, hitting a record $282 billion. Because of the growing need for GPUs to support generative AI workloads, public cloud infrastructure spending has increased by 48% and currently accounts for 55% of the market. Additionally, following years of modest growth, enterprise spending had a notable 21% surge. Synergy predicts that public cloud spending will continue to rise and may account for 65% of the industry in 5 years. The United States is taking the lead in the fast-changing global AI infrastructure scene. Former President Joe Biden signed an executive order on January 14 to accelerate the development of domestic AI infrastructure and strengthen U.S. leadership in the field. The directive instructed the Department of Defense and the Department of Energy to lease government locations for clean energy-powered gigawatt-scale AI data centers, with developers paying for all of the facilities. Using chips made in the United States, following labor laws, and guaranteeing AI security and safety are among the requirements. While advancing renewable energy technologies, agencies will expedite permits, improve energy transmission, and assist in the expansion of global AI infrastructure. With platforms for data centers, autonomous cars, robots, and cloud services, Nvidia is a leader in AI-driven solutions. Nvidia's price target was boosted from $160 to $175 by Barclays analyst Tom O'Malley, who kept the company's 2025 estimate for the semiconductor industry at overweight. According to the firm, the gap between businesses that are utilizing AI and those who are not will continue to define 2025. Barclays is less hopeful about cyclical semiconductor, analog, PC, and handset stocks, pointing out that recoveries in these sectors might take longer to materialize. Barclays is still selective in its selection of AI stocks, favoring those with proprietary serializer/deserializer technologies. On the list of AI stocks that investors most likely overlooked, Nvidia comes in at number 2 overall. Although we see Nvidia's potential as an investment, we are convinced other AI stocks have a better chance of producing larger returns in a shorter amount of time. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.